So now on with the show and into the data set. Steve?
Sure, and this presentation is going to get pretty chart-rich and there'll be a lot of data. I'm guessing that some of the people at the back won't be able to read all of the charts. We'll try and pull out the key points as much as we can. This one's easy. $1 trillion. We should exceed that in terms of global spending on consumer tech devices in 2012. Got pretty close in 2011, actually. A kind of weird dynamic, because at the same time as having clearly big economic issues both in the US and clearly in Europe. At the same time, we had some real strong product markets, which we're going to talk about. Clearly, we're going to be talking about smartphones, tablet PCs, really driving growth in quite a dramatic way. And it's really that growth that's going to continue through into 2012 and keep an upward trajectory. That's kind of, best to go straight into some detail.
Yeah, absolutely. So I hope you were paying attention, because you saw that precipitous drop in 2009. That's important, because that kind of formulates the base for a lot of these significant growth rates that we're seeing happened in 2010. This is why you're seeing a lot of these double-digit growth rates, whether we're talking the developed world or the emerging world. It's coming off that bottom and really lifting up in a significant and rich way as a result of a lot of these new product categories. So North America, 10%, emerging APAC, again, anchored by India and China, very strong growth rates. You're going to see those growth rates continue as I move through the years. Elsewhere, what's interesting is I think we think about emerging economies as all kind of chugging along and they're just all massively growing. That's true to some extent, but what you're going to see here is that some of them are firing at different times. And again, these are all variables that are driven by the base, and so growth rates are obviously are relevant therein. But Latin America really popping in 2010, because it was exceptionally hard hit, I think, in that 2009 downturn.
Yeah.
So moving into 2011, we start to see that growth cooling in Latin America, and Eastern and Central European countries and economies really starting to pop a little bit. And again, I'll say it again, that strong, two-fisted economic punch by India and China and emerging APAC with 17%. Meanwhile, starting to see those growth rates pull back a little bit in the developed world. Again, price deflation, competition. We see more maxing out penetration rates for a number of mature product categories. So this is...
Stop.
Oh.
So you've seen Western Europe, so...
Oh, I forgot about that.
This doesn't make sense, right? So 2010 was a recovery year, but globally. Yet we're showing a negative 0.4% decline in contraction in the Western European market. Similarly, 2011 has been a tough year in Western Europe, and yet we're showing a positive growth. That's exchange rate. So the swings between 2009 and 2010 was about 5% in one direction. Between 2010 and 2011, about 5% in the other direction. So if you're looking at it in actual euro currency, in fact you'd be looking at a 5% growth in 2010 and a negative 3% decline in 2011. That's why it's very important to kind of bear that in mind. So we're kind of trying to show everything in a uniform way, but just remember that. Yeah, it's going to come up again.
Yeah, it is, and I won't forget Western Europe this time, Steve. So moving on, so now this is, instead of 2010, 2011, we're looking at 2011 and this year's comparison. And again, it's really an extenuation, isn't it, of a lot of the trends that we saw before. Latin America continuing at 11%, again, the strong emerging APAC at 18%. Those emerging markets continuing to grow, and we'll get into some detail. But overall growth worldwide is slowing a little bit, price deflation. But Steve, what's happening right there?
So, now, here we're assuming a flat exchange rate from 2011 into 2012. Clearly, the FX between US dollar and euro has been sliding or changing over the last month quite dramatically. Not quite sure where that's going to end up, and obviously we don't really know what's going to happen in terms of the actual fortunes of the euro going through 2012. But I think there's two reasons for thinking that there is significant downside risk to the Western European market. One is simply that there are still several economies in Western Europe that are still in deep trouble. We're talking about Italy, Greece, Spain, even the UK, really not in a good position yet. And retail spending is taking a real hammering.
Hopefully the Olympics will help.
Maybe a little. Probably not so much. So that's one downside factor. The other downside factor is clearly if the euro continues to weaken, which is where it's headed at the moment, that could compound that issue. So wouldn't be surprised to see spending in Western Europe being significantly below that -3 in 2012. We'll kind of be reviewing our numbers. Our first review of next year will be in February, March. We'll take an initial view on that at that point. But it's a bit close to call at the moment. Yep.
Right. So here we've kind of provided a summary for you. So this kind of helps you out as you're crafting stories about where in the world are we seeing market opportunities really shifting. Well, clearly it's from developed to emerging. And the numbers really speak for themselves. Not only the actual dollar valuations, but the percentages tell a pretty meaningful story. Just in a few short years, isn't it? Just with those emerging economies growing so strongly with the growth rates that you just witnessed, are really changing the nature of the conversation in terms of where in the world is the opportunity. So we expect in coming years, when we're going to be presenting this data, that this number for emerging is going to continue to grow, and developed economies will invariably slip below 50%. So this is why we want to underscore for you that these emerging economies are truly adding to the market opportunity, but they really are the locus, if you will, and focus of growth.
And it's a kind of an acceleration trend as well, because you've got the double effect of the mature markets really kind of plateauing off and going nowhere to a large degree, at the same time as you have accelerating growth in emerging markets. So there's two effects coming together to kind of really start to shift things quite fast.
Yeah.
And that's really just started to happen.
So here's just kind of showing you a little bit different view of how those shares of global retail consumer technology product spending is kind of shifting across the globe. And we've tried to highlight here with these two blue arrows, the emerging APAC, again, India and China, chief economies in that grouping. And as Steve just said, the pace is quickening because those growth rates are so consistent year over year over year. Again, really that 1-2 punch.
As the first, you can see 2012 is the first year we would forecast the emerging markets to actually be the largest. That's obviously the way we're aggregating those markets, but if you really look at emerging markets, actually larger in consumer spending terms than North America or Western Europe separately. That's a pretty significant milestone.
And you looked at like the aggregate of the BRICS markets as well.
Yeah, I mean, if you look at individual countries, the key drivers in different emerging markets, Russia, India, China, Brazil, they're all growing at somewhere between 20 and 50% a year, every year. Some years one of them's going down, other one's going up slightly higher, but pretty consistent growth rates. And if that level of growth rate compared to single-digit growth or even negative growth in developed Asia, for example, or Western Europe, that starts to pile up.
So here's looking from a product standpoint, some of the master categories that we track within GfK Digital World. And tablets you can see represented by the yellow, starting to encroach on that pie a bit. 2012, about 5%. Still, and we're going to talk in detail about what's happening with tablets and what are some of the volumes, but I'll preview that by saying that certainly North America, where the birth of the tablet market took place, really commands a very strong lead in terms of driving the volume that's impacting some of this share. But what we want to drive home is just the significance of mobile connected devices embodied by feature phones and smartphones, these two green bars at the bottom. Really significant. In addition to that, TVs, LCD TVs, we'll talk in detail in the coming moments. And desk PC, still really has a presence. We're going to talk more about computing, but this is kind of showing how, from a product standpoint, some of that share of that global revenue pie is starting to change.
So, okay, this looks this is supposed to be black and red. I'm not sure if you can see this. I mean, the real difference between 2010 and 2011 just passed is that in 2010 you still had a number of different